Sheila Darby here with BizWorth. Thanks for joining me for another case study. Today I'm going to focus on the construction and site preparation company. And this was a particularly interesting case study and company. I'm going to review many things specific to the site preparation industry, but I'm also going to cover a lot of just general valuation concepts and how we cover our business appraisal reports. So if you're an owner of a different type of business or looking to purchase a company within a particular industry, you'll still find a lot of interesting information within this particular case study. If you do find this case study to be helpful in any way, please do go out on YouTube, like our video. Feel free to subscribe to our channel. I also invite you to follow BizWorth on LinkedIn or our Facebook page. And as always, if you have any questions, do not hesitate to go to our website at bizworth.com to leave us a question under the Contact Us page. You're also welcome to set up a free consultation if you'd like to discuss any valuation needs of your own. So without further ado, let's discuss this particular case study for a site preparation company. This particular site preparation company was located in the state of Texas. I will say that we've changed all identifying information about this particular company. We always start with the date of valuation on our appraisals. Anything known and knowable up until the valuation date is included in our valuations. All of our valuations are conducted by certified appraisers. Most everyone on the team has a master's degree and certifications within valuation. For this particular appraisal of this construction and site preparation business, we value 20% of a non-controlling, non-marketable ownership interest within this particular company. For this particular company, this ownership percentage did not have any control, any decision-making abilities. And so when that's the case, sometimes discounts are reasonable and applicable, such as lack of control or marketability discounts. Sometimes in other cases, premiums may also apply. Regardless of the type of business or industry that you find your business in, our table of contents for every appraisal is exactly the same. We start with an executive summary where we summarize all the sections within the valuation report there. So if you're needing a quick 2-minute overview, that's where you find it. And then we discuss everything from the economy and industry to the nature and history and earnings potential of the subject company. And we move into the financial analysis of the company, which we'll discuss why that's important. And then we discuss the meat and potatoes. We go into the valuation. We discuss all the approaches we consider, and we discuss the methods that we used, and then we just lay out step by step how we conducted the valuation. There's lots of appendices within our reports as well, but we won't cover them here in this case study. To begin with, I think it's helpful to start with the executive summary and show you how we summarize the valuation. This is the last section that we ever write in one of our appraisal reports, but it's the first section you'll see. It is the executive summary. We start with the conclusion of value and what that conclusion of value, what percentage of interest that's for. So in this case, $200,000 represents a 20% ownership interest. It's important to know that if a particular owner owned something different in this company, that you couldn't necessarily gross it up. Sometimes discounts are applied to different ownerships for different reasons. And so when you're getting a valuation for a specific ownership interest, it's not always as easy to gross it up and then apply your ownership interest because of the discounts or premiums that may be applicable to your valuation. On the right-hand side, we talk about the valuation for this site preparation business. And what a site preparation business is, they're in the earth moving business. They're getting a location ready for construction, whether that be for residential or commercial. They're in the site preparation business. And this valuation was for a share redemption of one of the owners within the business. And we talk about all the important aspects of of the appraisal to the right. And then we jump right into what was the purpose of the valuation, what is this at a summary level, what's the nature and history of the business. And we talk about the economy and the industry. It's important to understand the economy and the industry because oftentimes that's where we as appraisers, we look to see not only the history of the company and how they performed, but we're also looking at how the company performs in regards to its industry and the economy. And then we look at the growth rates and the growth potential of the industry and the economy. The financial condition and earnings potential of the company is super important. We also do a benchmark to competitors. In this executive summary, we typically just do a quick summary of how the company's been performing, and then we end with the valuation. And here, you can see that we discuss all the different approaches and where we settled, and we discuss why we settled there. The introduction is basically talking about the high-level information about the valuation, the premise of value, the standard of value, the valuation procedure that we used. But the nature and the history of the company, this is where it starts to get very specific to the subject company that we're valuing. We look at everything from when the company started, the organization, the ownership, the background of the company. We also look at, are there any key people involved in the business? So if they walked away for a month, or if they won the lottery and walked away, would the business still be okay? Could they operate without that person? If something unfortunate happened to a key individual, what would happen to the business? We look at the services. For this site prep business, we were looking at a company that did land clearing, mass grading, lot fills, material removal and haul off, erosion control. And then we moved into their customers. We looked at what's their customer concentration. Obviously, the more concentrated the revenues are within a few customers, the more risk there is and the discount rate may be affected. But with that being said, there are a lot of great companies that have one customer. Does it mean the risk profile goes up? Sure. But it doesn't mean the company's not profitable and won't do well in the future. But it does change the risk profile of the business. We talk about a company's competition. Is it highly competitive? Is it not? Is it more commodity-like where the industry is based on price? Within the site preparation business, to some extent, to a large extent, it's highly price sensitive and it's very competitive. It's a bidding market. So the site prep business can be extremely competitive. So with that being said, there can be lots of bankruptcies within the site preparation industry because accounts receivable can really build. And that's typical within the construction industry itself. You're waiting for the key contractor to get paid, they're getting paid based on milestones. And then you're waiting for the subs to get paid. So it takes a while. We look at overall company strengths and weaknesses, and we factor that into the future potential growth of a company. One of the interesting things about some construction and site prep businesses is because accounts receivable can grow and it's a very cash constricted business, you're waiting and you may have to factor receivables. You may have to have a very large line of credit. It could constrict the growth of a particular company. So for example, within the industry, the growth may be significantly higher than what a company might be able to do over the next year just because they're being constricted from the cash flow. So we look at those types of company-specific impediments to growth, and it may be a short-term obstacle. It may be something that a company can get past in a year, but it does increase the risk and it does limit the growth potentially of some growth in construction companies. On the flip side, there's site prep and construction companies that have ample cash and ample access to liquidity, and that's only going to help them fully realize their full potential and growth. Here, talking about the growth, we do look at the economic growth. We look at the industry. We here at BizWorth, we subscribe to industry reports. There are companies out there that study industries. They talk about growth trends, and we subscribe to those. We think it's very important that not everything be based on free research, that there are very reputable companies out there that produce really wonderful reports, and we subscribe to those. And those are important for our valuations. We look at those reports, and we also look at the competitive landscape, not only within the industry, but specifically within the region. We look at what are the competitors doing and how is the company performing to them. We look at the products and operations. Where's the revenues concentrated at? Industry indicators. We're looking at the industry forecast. For example, how's the industry going to do in the future? So this particular industry for site prep is obviously above the GDP forecast. So this industry is very strong. But when we looked within the particular region that this particular site prep company sat, the growth rates were even higher for construction. So it even outpaced the national industry growth. So that's why it's important to drill as deep as you can. We also look at industry drivers. What's driving the industry? In this case, for site prep, it's interest rates, consumer construction spending, and government regulations. Also, the business challenges and trends of this particular industry. And we look at all industries and we look at what those business challenges and the trends are. Could be fuel prices for this particular industry, personnel and equipment, full deployment, not having idle machinery, high turnover of manual day laborers. That could be very tough too, not having enough people on the ground. So we look at that. Accident liability within this industry is a trend. And then just general competition from general contractors. Regional outlook, we dig into the regional outlook, and then we place an overall takeaway summary for the site prep business. The financial condition and earnings potential of the subject company, that's always really critical. And any particular company, as a layman looking back, you may see the details of a particular company and just say, wow, that company's doing awesome. Or that company is doing horrible. And let's take that company. You may think that a particular company has horrible cash on the books and very high receivables that they haven't collected upon. But when you take that subject company and you compare them to the industry, you may see that they're doing much, much better than their industry. And so while compared to a lot of industries, accounts receivable may be really high, within their own particular industry, that company is actually doing much better than their average peers. And that's why we take benchmarking within the industry seriously. So we look at financial analysis, not just to look at the past growth, the past trends, where the company's been, and give as a potential indication for how they're going, where they're going in the future. But we also look at it from a sense of, is there any constrictions on growth? Will the company have access to the debt that they may need, or access to the cash that they may need to foster the growth that they need? And then we do a benchmark study. So from there, we look at the income statements, we look at the balance sheet, we're looking at those for adjustments. Sometimes private companies do need adjustments. Sometimes there could be non-operating assets on a balance sheet, very expensive land or buildings that are not being used. Sometimes owner salaries are grossly above or below industry. And so there's adjustments there. And those are very common to have those type of adjustments. So it's never outside the norm to have adjustments to the income or the balance sheet. We look at key ratios, liquidity, asset management, profitability, debt management. We're comparing to the industry. And then we move into the valuation. And we are looking at the three general approaches. We're looking at the income approach, we're looking at the market approach, and we're looking at the asset approach. And when a company is more asset intensive, oftentimes the asset approach will be more insightful. But when it's a service heavy business, the asset approach, it may not be as insightful. Or if the equipment's really old, or if there has not been recent appraisals on equipment and the owners do not want to perform one for our business valuation, then again, sometimes the asset approach isn't as insightful. Here on the income approach, lots of different methods can be used and evaluated. For this particular evaluation, we looked at the multi-stage growth method. And then we walk step by step of how we conducted that particular evaluation, and all the way down to the discount rate and how we generated the discount rate, where the information is getting pulled from. And BizWorth has subscriptions to really good sources to be able to document how we generate our discount rates. The market approach, we also have access to numerous databases that provide really wonderful comps. But still, even then, sometimes we can't find sufficient comps, or oftentimes maybe we can find a lot of comps. It just depends. In this particular case, we did look at market comps as well, and then we looked at the asset approach. In this particular case, the company did not have recent asset value, so we did look at the book the book assets as well. This particular case, we're valuing a non-controlling interest. We did apply a lack of control discount and lack of marketability discount. And then we concluded that for 20% value of ownership in this site preparation business, it was a $200,000 value. So I hope you found this case study to be helpful. We tried to include some specific details for the construction and site preparation business. And we end our appraisal reports with lots of appendices. Again, if you have any questions, please go out to bizworth.com, send us a question through our contact us page. You're also welcome to set up a free consultation. We have access to our calendars. So please, I welcome you to do that as well. And as always, please like this video on YouTube, subscribe to our channel, and I invite you to follow us on LinkedIn and Facebook. Thanks again.